Hey everyone, and welcome back to the channel. Today we're diving deep into a topic that's on everyone's mind: how to build real, lasting wealth. We're not talking about get-rich-quick schemes, but a solid, long-term strategy for your financial future. We'll be covering everything from stocks and ETFs to the wild world of crypto and how you can combine them to build a powerful portfolio. So grab a coffee, get comfortable, and let's get started. Let's begin with the foundation of many successful long-term portfolios: ETFs, or exchange-traded funds. If you're new to investing, this is the perfect place to start. Think of an ETF as a basket that holds hundreds or even thousands of different stocks or bonds. Instead of you having to pick individual company stocks like Apple or Amazon, you can buy a single share of an ETF and instantly own a tiny piece of every company in that basket. Why is this so powerful? 2 words: instant diversification. By spreading your money across many different companies, you reduce your risk. If one company performs poorly, it's balanced out by the others. This is why ETFs are often recommended as the first step for long-term investors. For example, an S&P 500 ETF gives you exposure to the 500 largest companies in the US. It's a simple, low-cost way to bet on the overall growth of the economy. You don't have to be a stock-picking genius. You just have to believe in the long-term progress of the market. And historically, that's been a very good bet. Now, let's talk about the classic debate: stocks versus crypto. Which one is the smarter move for your future? Stocks represent ownership in a company. When you buy a stock, you're betting on that company's ability to grow, innovate, and generate profits. They have a long, proven track record of generating wealth over decades. They are regulated, transparent, and their value is tied to tangible business performance, things like revenue, earnings, and assets. The other side, we have crypto. It's the new kid on the block, decentralized and operating on blockchain technology. The potential for massive returns is what draws people in. We've all heard stories of early Bitcoin investors. However, with that high potential reward comes extremely high risk and volatility. Crypto prices can swing dramatically in a single day, and the market is still largely unregulated and influenced by hype and sentiment. So which is better? It's not an either-or question. The smart move is to understand their roles. Stocks are your reliable, steady engine for growth. Crypto, for most people, should be treated as a speculative, high-risk part of your portfolio money you can afford to lose. Think of it as the spice, not the main course. It could add some serious flavor, but you wouldn't want to build your entire meal around it. This brings me to one of the most important principles in investing. Forget market timing. So many people get caught up in trying to buy low and sell high. They wait for the perfect moment to jump in, or they panic sell when the market dips. Let me tell you, even the most seasoned professionals consistently fail at timing the market. It's a losing game. The news, the charts, the social media buzz, it's all just noise designed to make you act on emotion. The real secret to building wealth is embracing a long-term strategy. This means consistently investing your money over time, regardless of what the market is doing today. This approach is called dollar-cost averaging. By investing a fixed amount of money at regular intervals, say $100 every month, you automatically buy more shares when prices are low and fewer shares when prices are high. Over the long run, this smooths out the bumps and lowers your average cost per share. Time in the market is far more powerful than timing the market. Stay the course, be patient, and let compound growth work its magic. Now let's circle back to crypto and ask the big question: is it worth the risk for long-term investors? The technology behind cryptocurrencies, the blockchain, is genuinely revolutionary and could transform many industries. Proponents believe that certain cryptocurrencies, like Bitcoin, could become a digital store of value, similar to gold, or that platforms like Ethereum could become the backbone of a new decentralized internet. If these visions come true, the long-term potential could be enormous. However, the path is filled with uncertainty. We have regulatory hurdles, technological challenges, and the simple fact that many crypto projects will likely fail. So, if you're considering crypto for the long term, you need to do your homework. Don't just buy a coin because its price is soaring. Understand the project's purpose, the team behind it, and its real-world use case. And again, only invest what you are prepared to lose. A small allocation, maybe 1 to 5% of your total portfolio, is a common approach for those who want exposure without risking their financial stability. So, how do we put all of this together? let's talk about building a diversified long-term portfolio with stocks, ETFs, and crypto. This isn't a one-size-fits-all formula, but here's a framework. The core of your portfolio, maybe 60 to 80%, should be in low-cost, diversified ETFs. This is your foundation for steady, reliable growth. You could choose a mix of broad market ETFs that track the US stock market, international stock markets, and even bonds to add stability. Next, you can dedicate a smaller portion, say 10 to 30%, to individual stocks. This is where you can invest in companies you truly believe in for the long haul. Maybe you love a certain tech innovator or a company leading the way in renewable energy. This part of your portfolio allows you to take slightly more concentrated bets than an ETF would. Finally, you have your small, speculative slice for crypto, perhaps 1 to 5%. This is your higher risk, high reward play. Focus on the most established projects like Bitcoin and Ethereum before venturing into smaller, lesser-known altcoins. Remember, this is the most volatile part of your portfolio, so be prepared for a wild ride. If you decide to allocate a portion of your portfolio to crypto, it's crucial to have a strategy. Don't just buy and hope. A popular strategy for long-term crypto investing is, again, dollar cost averaging. Consistently buying a small amount every week or month helps you navigate the insane volatility. Another strategy is to simply hodl, which is crypto slang for holding on for the long term through all the ups and downs. This requires a strong belief in the technology and the discipline to not panic sell during market crashes. When choosing which cryptos to invest in, look for projects with strong fundamentals, a clear use case, an active development team, and a strong community. Avoid chasing meme coins or coins shilled by influencers without doing your own research. And please prioritize security. Use reputable exchanges, enable two-factor authentication, and consider moving your assets to a personal hardware wallet for long-term storage. Never share your private keys with anyone. Ultimately, mastering your financial future comes down to one key concept: diversification. It's the only free lunch in investing. Balancing stocks, ETFs, and crypto is how you build a resilient portfolio that can weather different economic climates. Your ETFs provide stability and broad market exposure. Your individual stocks offer the potential for higher growth from specific companies. And your small crypto allocation gives you a shot at exponential returns, while being small enough not to derail your entire plan if it doesn't pan out. Think of it like building a team. You need your reliable all-star players, those are your ETFs. You need your specialized offensive players who can score big points. Those are your individual stocks. And maybe you have one rookie with incredible, unproven potential, that's your crypto. Together, they form a balanced team that's ready for anything. The key is to tailor your allocation based on your own risk tolerance, age, and financial goals. A younger person with decades until retirement might take on more risk, while someone closer to retirement will likely favor a more conservative approach with more bonds and fewer speculative assets. There you have it, a complete guide to building a long-term investment portfolio. Start with a solid foundation of ETFs. Consider adding individual stocks you believe in. And if you have the appetite for risk, sprinkle in a small amount of crypto. Most importantly, be consistent, be patient, and focus on the long game. Don't let the daily noise distract you from your goals. Thanks so much for watching today. I hope you found this breakdown helpful. If you did, please hit that like button and subscribe for more content on building wealth and achieving financial freedom. Let me know in the comments what your investment strategy looks like. See you in the next video.